Hey friends, the work week is wrapping up and market liquidity is gradually decreasing. It will be even lower over the weekend when most people are taking a break. Meanwhile, Bitcoin is currently trading at an impressive $85,000. But that's not the most interesting part. What's really intriguing about the current situation is that we've once again dropped below the 200-day moving average and also fallen below the significant $85,600 level. This is what we discussed in the previous episodes and what I warned about earlier. I mentioned that until we see a solid consolidation along with a setup of 6 points on the 4-hour time frames, we shouldn't open any long positions. So without forming the 6th point here, we've fallen below the level again. What does this tell us? The question at hand is, can we attempt to open long positions right now with the aim of moving higher into the 90-92 zone? Or on the contrary, should we be preparing for a deeper dive? Today we'll discuss this, moving on with the schedule. If you haven't subscribed yet, make sure to do so and hit the like button. Also, I recently started my Telegram channel, and I strongly recommend subscribing to it so you don't miss any updates or important information. The link to the Telegram channel is right below the video. This material is brought to you by Alex Crypto. Fly in and let's get going. Alright, let's break it down step by step. So 1 on the 4-hour time frame. I want to remind you of what we have. We've got an ascending price channel here, and if you take a closer look, you'll see how smoothly we moved from the lower boundary to the upper boundary, almost without any deviations at all. But the really interesting part came a bit later, specifically in the last movement. Not only did we reach the upper boundary of the price channel, but we also managed to break through the $85,600 level. We crossed the trend line, which I've clearly marked with a white line, and in addition to that, we also broke through the 200-day moving average. Accordingly, this is an interesting case because it signaled to us that Bitcoin might potentially break this level, consolidate for a period of time, and then move higher into the $90,000 to $92,000 range. Now, I recall the setup I envisioned for myself. This is a setup consisting of 6 specific points on the 4-hour time frame. Accordingly, we didn't form the 6th point, we didn't see any level protection or rebound here, and we fell down. So without this setup, I don't think it's a good idea to open a position. Now the main question. We're currently at the lower boundary of the price channel. On one hand, we could potentially move back up to its upper boundary, which would be the target value. The zone is $90,000 to $92,000. But what are the risks involved? Let's have a natural conversation together now. Before that, friends, a brief traditional reminder. If you're trading, always use a quality exchange. For me, Bybit has been a reliable partner for many years. So if you do not have an account on Bybit yet, you can use my link below this video to sign up and potentially get up to $30,000 in bonuses on your first deposit. Use promo code 24676 or my link. This isn't financial advice, I just love this platform and trade on Bybit myself. Give it a try, see if you like it. If you do, great. If not, no worries. Plus an important announcement. We launched a trading chat 40 days ago, which I mentioned before. Actually, we prepared it, and for everyone trading through my federal referral link, guys, we have a trading chat available. Firstly, I will provide a link to the trading chat right below this video. You will find it under the video. Secondly, you can visit the Telegram channel and see the trading chat there. This is a space where traders come together to share their positions and discuss their setups. There's no spam, no clutter, just a productive atmosphere. Be sure to visit the first link under the video and join. It's completely free and very useful. Moving on. So first, where would I look at the positions and how exactly would I act on them? Even though we're currently at the lower boundary of the price channel, this particular level isn't a significant one for me. The more important level is actually a bit lower, where we have liquidity trading, which is around the $84,000 zone. When Bitcoin reaches the $84,000 zone, you can consider looking at local long positions with a fairly short stop, placing it just behind some nearby lows and targets. This strategy allows you to manage your risk effectively while aiming for potential gains. The first target is zone 87, and from 130, the target is the $90,000 zone, which is the upper boundary of the price channel. Why 87.5? Because resistance has appeared here. If this position doesn't work out, remember the risks. Always weigh your psychology, weigh the risks, and think for yourself. I'm just sharing my opinion. If this position goes lower, I'd look at the $78,000 to $79,000 zone, which is the lower boundary of my purple rectangle, or I might even consider the $74,000 zone. The $78,000 to $79,000 range serves as a critical lower boundary, but the $74,000 zone could also be a significant level to watch. Why? Let me show you clearly now. Just a second. Let me clear this up so there's nothing unnecessary, because if this zone 84 doesn't hold us, it means we're falling out of the price channel. This means that we have dropped below the 200-day moving average once again and have settled beneath it. So what this means is that we're seeing a setup playing out on a higher time frame. On this higher time frame, there's a downward structure, a trend break, and then what we call bear flag. That is, on a higher time frame, we have a descending structure on the smaller time frame and an ascending one with a potential breakout up to the $74,000 zone. This particular quote fits perfectly in this context, so I would be very, very cautious with the use of slang at the current marks. The only position that I can see nearby is approximately $4,000 away from this liquidity zone. If it works out, great. I've shown the targets that we are aiming for. If it doesn't work out, then we are only looking at zone 78 and the $74,000 zone for Bitcoin. This is roughly the same picture, and accordingly, I simply do not see any other setups here right now, because let's assume that we returned here directly from the current levels without reaching 84 and came back. For example, here we have a huge resistance zone, and it will act as a resistance zone. Locally, shorts are even more favorable than longs because to break it, we need to go further and consolidate, and there's too much interference here. For us, what hinders growth is why I have once again fixed the 30th stage at $84,000, $78,000, and even lower. The $74,000 zone is a key scenario for me. Honestly, the market situation doesn't look very good at the moment. I have a slight feeling that the bull cycle might be over, but whether it is or not, we'll find out a bit later. For now, the overall mood is still bullish, but don't forget to stay cautious. I want to draw your attention once more to the $92,000 zone, as it is very important. Here, we experienced a trend break on the daily time frame. And we can talk about our continuation being a reality only if Bitcoin returns to the $92,000 zone and consolidates here. If Bitcoin goes above 90, reaches $92,000, and consolidates, we can say the cycle continues and everything is okay. Until that happens, we have a question. What other scenario could occur, and how might this level shift lower? For instance, if we experience a decline from the current levels, let's say down to the $74,000 zone, then our target mark changes. We need to consolidate not at $90,000 or $92,000, but rather above $88,000. Specifically, we need to consolidate above this high point when consolidating above $88,000. Again, we're discussing the continuation of the bull cycle. This is how I see Bitcoin. I could be wrong, friends, so think for yourselves. If you find what I suggest useful and what some people share with me, please make sure to subscribe to the channel and hit the like button. It's very important to me. Please share your opinions in the comments. Any feedback is welcome. Now let's take a look at a few more moments. The next one we will explore is Ether. Ether is behaving terribly in this cycle. Just a reminder, regardless of how it might feel right now, I'm not interested in anything at all except for two levels, level 1,600 and level 1,200. Everything within this range seems like a good buy to me. Everything mentioned above is completely uninteresting to me. What you might want to pay attention to now is why TON is slightly acting against the market trend. It goes somewhat against the prevailing trend, and so I draw your attention to the following setup. We had a resistance zone for TON right here. Previously, we were trading below this level, meaning we did not break through it and continued trading beneath it. However, now a breakthrough has occurred, and if we observe a consolidation structure in the $3.8 to $4 range for TON, positions can be opened from the lower boundary, as he mentioned. In my opinion, the targets are in the $5 range because there's liquidity in the $5 zone, which is also a resistance zone plus the 200-day moving average. This creates a good setup, so you might want to keep an eye on TON. It's currently moving a bit ahead of the rest of the market and is feeling pretty good. Alright friends, that's everything for today. If you found this helpful, please subscribe, hit the like button, share your thoughts in the comments, and subscribe to the Telegram channel for more info.